Look, make no mistake about it, debt will collapse the global economy, and I'm going to prove it to you. You see, debt causing a collapse is nothing new. As a matter of fact, wives have been teaching their husbands about this for thousands of years. Just kidding, ladies. I mean, not really, but hopefully you can take a joke. The funniest jokes are usually the true ones. On a serious note, debt has been causing collapses for thousands of years now, and this goes all the way back to BC times with the Athenians, all the way to the Roman empires, talking about both Eastern and Western empires, and then many countries in more modern times like Venezuela and Zimbabwe. And really, it's the same pattern each time. Countries start with real money, and precious metals has been the primary use for this for the last thousands of years. That's why I love my precious metals. Countries grow, so the expenses grow. There's usually more social programs made, there's a growing military, and eventually war. And war is really the biggest one that causes the most damage. With the growth comes expenses that can't be afforded. Sounds like a lot like our relationships with the ladies, eh, fellas? The real money slowly turns into fake money or fiat currency. 100% silver coin turns to 80% silver, to 50%, to 20%, all the way down to zero. The real money gets debased more and more as expenses pile up until finally it's totally debased. You then have fake money, and fake money is easy to coin or print, unlike real money. I mean, look, getting real money out of the earth, mining precious metals, is a long and expensive process. Printing fake money is virtually free, and that's when the debt problem starts to take off and starts its path of destruction. Let's imagine this. Let's think of this like a hurricane, right? And this hurricane, it starts out way in the sea and it has to touch land at some point. And we have control of when this hurricane hits up to a certain point. We could have this hurricane hit early on and it would have caused some destruction, but it would have been that bad, right? Would have been maybe like a tropical storm if we had it touch early on. So we could hit a button that says, hey, we'll take that hurricane right now. But we always say,
We don't want a storm right now. We want sunshine.
let's hold off on that storm. The problem is, the longer we have waited, the bigger the hurricane has got as it's accumulated more and more debt. We're at a point where the hurricane is so big that it has to touch land at some point. It's too big at this point for the ocean alone. We no longer have the choice of letting it hit. It's going to do it on its own because it has nowhere else to go. And it's reached beyond category 5 levels, and it's a superstorm, and it's going to touch down soon. And this is not Hurricane Houdini, right? It's not just going to magically disappear like my gold does when I go to sell it for profits. So how did we get here? Good question. Before I tell you, make sure you hit that subscribe button. Just give it a little tappy. Give it a little tap-taparoo. Name that movie. All right, so long story short, in 1971, President Nixon ended the gold standard. Great job, dummy. This cut the link between the dollar and gold. What this did is it basically cut the gold convertibility to the dollar. Now, before this, other countries that did business with the United States could convert their dollars to gold. What happened was that France kept asking for their gold, and other countries started following suit. Nixon then came out and said, hey, we are no longer going to exchange our dollars for gold, and that's when he axed the gold standard. And not surprisingly, this caused a mini currency crisis. Well, the US solved this crisis by convincing Saudi Arabia to price all their oil in dollars. And this was very smart, as you'll soon see, for both sides. The whole world needed oil to run their economies because oil is obviously energy. Nobody's economy could run without oil. So everybody had to buy oil, but ding ding ding, they needed dollars to do it. But why the heck would Saudi Arabia do such a thing? Well, because back then, Saudi Arabia wasn't what you know it as now. The US agreed to protect them and to turn them into a modern day society. Now, of course, they're one of the most advanced societies in the world. And the family that was in power back in the 1970s when this was going on, they're still in power. You wouldn't say. You scratch my back, I'll scratch yours. This all cemented the dollar as the global reserve currency. That means the whole world needed dollars. People started saving and borrowing in dollars. and that solidified the dollar. It also solidified fiat currency on a worldwide level, something that has never been done before. This is really important because fiat currency has a 100% failure rate. What's different is that fiat currency has never been worldwide as it is today. Awesome! Aren't you guys pumped? We took something that has failed 100% of the time and we made it even bigger. Woohoo! We made it worldwide, and we're living in the part where it's going to come crashing down. Go Team Kamikaze! What has been a major contributing factor to the fall of empires like the Great Roman Empire is now being used on a worldwide scale. We, me and you, are the test subjects of a worldwide fiat currency. They said, hey, this fiat currency stuff, it's collapsed every empire it's touched. I have an idea. Let's see if it does the same thing worldwide. This is going to be so fun. Thanks for volunteering us for this mission yet. So leave a comment below. I'm interested to see how many people watching were aware of this. We love hearing from you guys. Let's get back on track. Also, consider for a long time there was globalization, the last 40 to 50 years or so. Now you have everything falling apart. It's Russia versus the US, it's China versus the US, it's BRICS countries versus the US. Not to mention all the other stuff that's going on around the world not involving the US. Although it does seem like everything involves the US in some way or another. We're so chauvinistic. So we had globalization and expansion for a really long time, but now we're starting to crack and contract. And if you look at the debt of the US, almost $34 trillion at the time I'm shooting this, there's no conclusions on how to deal with it. No good ones. Not one single person has come up with a practical way to deal with all this debt. And really, most people just refuse to talk about it. The truth is, this debt will either be defaulted on or inflated away, or likely a combination of both of those things. But the thing is, the United States is not the only country in trouble, and actually, as big a trouble as we're in, we are probably in less trouble than almost everyone else, and you're about to understand why in just a minute. And by the way, don't take that comment the wrong way, because the US is in a heaping of trouble. But of course, people just tend to focus on the US. The problem with that is we are not an isolated economy. We are now a global economy, and everyone is in serious trouble. As much trouble as the US is in, we are probably in a better position than anyone else to take the hit coming, as I just mentioned. But that still doesn't mean the hit isn't going to be big. We are going to get slapped like a mug. And I already can feel what your next question is.
So, Greg, if we're in such bad shape, how the heck is the value of the dollar going up? If debt and all this money printing causes devaluation of currency, would the value of the dollar go down?
What people don't understand is that currencies trade relative to each other. So the value of the dollar has gone up, but it's relative to what the other currencies have done. And don't forget, there's also just so much demand for US dollars. This all goes back to the deal with Saudi Arabia some 50 years ago. What most people also don't understand is since the dollar is the global reserve currency, all of our money printing doesn't just affect the United States. We actually had the benefit of getting to deflect a lot of the damage of our money printing to the rest of the world. And that's really how we've survived the massive amounts of money printing over the last 15 years, where we've accumulated 70% of our 240-year national debt. A lot of that inflation has drained out until the rest of the world holding dollars. And that's another big reason the dollar has been able to gain value even after all of the printing. And that's also the reason that other countries are in more trouble than the United States. Because just like the United States, they are also printing money. Everyone else is also on fiat currency. The problem is that their printing holds to their country with no exit, whereas the US printing drains out to the rest of the world who relies on the dollars. When other countries print money, they mainly devalue their own currency. When the US prints money, it doesn't devalue the dollar nearly as much as it would if other countries were printing at the same rate, because the inflation gets drained out to the rest of the world relying on the dollar. And this is exactly why other parts of the world are getting hit harder than the US, who may be printing more than they are. The other countries have to take their own printing plus the drainage of the US printing since they rely on US dollars so heavily. And of course, the other countries don't have a drain like the US does, so their pool gets filled up quicker. And think of this as like the higher the pool is filled up, the higher the inflation will be. The US is just fortunate enough to have a drain at the bottom of our pool. So Who's going to survive all this? Honestly, it's hard to say. I will say that I think the US is one of the more safer spots because of everything I just talked about. And it's not that it's fair, but it is the case. But that also doesn't mean that a hard fall isn't coming for the US as well, because I believe it is. And debt is going to essentially collapse the whole global economy. The can only be kicked down the road for so long, and we're running out of room. So what can you do to protect yourself? Well, right now I've transitioned my money into two main places. The first one is CDs paying up to 6%. The second one is precious metals. Also, a little crypto, but of course that's a little more risky, so I'm gonna leave that out of this for now. For my CDs, I personally just use Vanguard, and then for the precious metals, I have all my recommended dealers listed below. My dynamic duo is definitely my CDs earning 6%, and of course my precious metals. I recommend getting some physical metals, but also roll a portion of your 401k into precious metals. All the charts are showing me right now that stocks are going to go down before they go up, and that's the opposite for precious metals. JP Morgan's top chartist agrees and thinks that the S&P 500 is actually going down to 3,500 to retest bear lows, whereas gold just broke through key resistance levels and is due for a bull market, especially considering the scope of the economy. Add in history, and you have a major case for a large run up in precious metals. Again, I got my CDs earning almost 6%. I bought physical metals. I've also rolled a portion of my 401k into precious metals to protect from a likely upcoming stock crash. Of course, after stocks crash and precious metals skyrocket, I reverse. I roll my precious metals IRA back to the stock market. Simple investing. Again, the dealers I use for physical metals purchases and for a precious metals IRA are in the description below. They're doing an awesome job helping you. If you don't know how to get CDs, just simply sign up for Vanguard. It's very simple. Just look, make sure you protect yourself from what's coming. I think it's going to be pretty messy. And thanks again to all the that volunteered us to a worldwide fiat currency. Appreciate you. Subscribe, tap it, tap taparoo, tap that subscribe button. See you soon.